when you look at this Bitcoin rally that we've been seeing the last couple of weeks and months, really there's two big elements driving it. One is the continuous entry of institutional players. We've seen over the last couple of months, for example, the large hedge funds of Paul Tudor Jones, Guggenheim's coming and embracing Bitcoin. And obviously that is, we expect that to continue over the coming months. For really, obviously there's various reasons, a lot of instruments now, traditional instruments that allow these institutional investors to get exposure to Bitcoin, but also there's a lot of regulated players as well. This was not the case a couple of years ago. So really the entry of institutional players, but the second big development that is driving this Bitcoin rally right now is retail FOMO. If you compare it to 5 years ago, Tanvir, where there was only 5 million people with an account at a Bitcoin crypto exchange, according to the latest data that we have, there's over 100 million people with accounts at a crypto exchange. And it's probably never been easier to buy Bitcoin and other cryptocurrencies, especially when you consider the entry of some of the large technology firms like the PayPal and the Square, which have made it even easier. So I think with all these two big elements driving it, there's a lot of momentum going on in the space, and there's a lot of optimism in the crypto markets as well.
Yeah, but is that optimism founded well on substance, on strong fundamentals? In all that talk about the adoption drive of digital currencies, I mean, you spoke about some institutional investors coming on board, essentially Paul Tudor Jones. Do you think that that's the kind of momentum that will really pave the way, that we are seeing this transition phase play out for Bitcoin?
Yeah, it's a good question. I mean, I think when you look at why these institutional investors are coming in, okay, we can argue all day whether it's a hedge against the quantitative record levels of quantitative easing we've been seeing, or frankly as diversification as part of the portfolio. The reality is that when you look at basic offer and demand, today, every 10 minutes, look at Bitcoin, for example, there's only 6.25 Bitcoin that are mined. That makes 900 Bitcoin a day. Just to put that in perspective, there's about $30 million in current prices. Only this weekend, in one day, in one of the large institutional exchanges, there was over 35,000 Bitcoin. That's over $1 billion Bitcoin that moved to cold storage. And according to the latest data that we have as well, that only PayPal and Square are taking themselves more than 100% of the newly mined Bitcoin that is coming to the market. So when you look at basic offer and demand, we're seeing a lot of pressure on that on the price, and that's one of the drivers why you're seeing this momentum in the market as well.